Welcome, everybody.
Welcome. Got a lot going on.
Do we?
Well, it's Super Tuesday.
Is there really a lot going on?
Super Tuesday, the day after, anyway.
What's going on?
Yesterday was Super Tuesday, man. You see what happened?
Going on? Today's Awesome Wednesday.
It is Awesome Wednesday. I'll give you that.
Yeah, dude. Trump won, huh?
Well, Trump killed everybody. Yeah,
Demolished.
The idea that anybody is running against him is just foolish, man. It's a fool's game right now.
But what do you do?
Nothing.
What does one do?
Well, I think Haley kind of shot herself in the foot for future. I think that's what she did.
Possibly, yeah. Yeah, she went a little hard, right?
Yeah, she went.
But they all do that. They all, even Trump. He's like, he was crooked Hillary. Then he's like, it's no longer crooked Hillary. It's crooked.
What's
Biden.
up? Hey, 10-3. Great to see you, man. Thank you for coming on board. We're just lighting it up, getting everybody here. We're going to talk about whether or not it's a good time to buy, certain guidelines, what's wrong with the loan world.
Yeah, is it a good time to buy? I want to know what you guys think in the chat. Is it a good time to buy? And whatever your answer is, justify. If it's a no, justify. If it's a yes, justify. And we will do the same.
Yeah, and if it's good interest rates, they're not so good. They're not so good. Like I went through this yesterday.
But are they so bad?
For some reason, our count went up to crazy yesterday. When can you refinance an FHA loan? Very good question, Alex Chavez right now, or RN. So, the guideline is 6 months, but there's a way that you should refinance. You don't refinance just because it's a good idea to refinance. If you just bought the house, then you got a price, and that costs you something. And if you refinance, the refinance is not free. If your loan officer says, no cost, oh, don't worry about it, nothing out of your pocket, that does not mean free. There is no free because the notary has to be paid. The new escrow has to be paid. There's fees in there that have to be paid, and the bank doesn't have the power to waive those fees. They've got the power to waive their fee. In our case, our bank fee is $14.95.
Yeah, 14.
I think it's $14.95, and our bank does waive the fee when we do certain refinances. So it's a question of whether or not it's a smart idea, but technically 6 months. Yeah.
How did he hate him 3? He said, honestly, I'm hesitant to buy, hoping that rates will drop domestically, LOL, or maybe I'm scared. So Lee and I were just talking about this, like literally just talking about this. People who want to buy that don't buy. Lee was making fun of me because I was in your guys' shoes at one time. And that's the truth. It's a little fearful, but where my fear kicked in was when I was actually in escrow. And I was like, wow, this mortgage payment's kind of steep. I don't know if I'm ready for this. But where you're at, I don't think there's anything to be fearful of. Have you been pre-qualified? Do you know where you stand? Is your credit in line? Is your income in line? Do you have the assets? Like, have you crossed those bridges? Because if you have, and then you're concerned, then I get that. But if you haven't, can you actually buy is the question. CJA 45769, can I open a HELOC on a first-time homebuyer's loan? Me? Okay.
Yeah.
So, no. You're not, when you do a HELOC, you're not attaching it to the existing loan. You're opening up a second loan. So a lot of people think that HELOCs are not second loans. They are. What a second loan is you have your first loan, and then you have your second. So a HELOC is a version of a second. And then there are standalone seconds. So that's where the confusion kicks in. But you are not going to attach it to your current loan. And the answer is, as long as you qualify, you can get a HELOC. It will be in addition to your current first-time homebuyer loan. So that first loan, interest rate, payment, all stays the same.
Count spiked, FYI. So what's the response time for a USDA loan application? Depends on what you mean. First off, is the property qualified for USDA? That's immediate. You just go to the USDA website, type in the address, and then you'll find out whether that property is eligible for USDA or not. So that's how you find out whether the property is eligible. Then the next thing is the loan officer or bank has to be qualified to use GUS. It's government underwriting system. And then that is, if you've got the access to it, you can get an approved eligible on GUS in an hour if you know what you're doing, maybe 2 hours or 3 hours if you know what you're doing. So that will give you the green light on whether you can move forward on an FHA loan, or I'm sorry, USDA loan. Now, if you're asking about underwriting is going to be bank specific. Sometimes they take a little longer, but usually if it made it through GUS and the property's good and you've been property qualified, it's pretty done deal. I mean, USDA is such a unique loan that if you go down that path, it's pretty done. You're pretty in there.
I'm going to assume this is on pre-qualification, though, because he said loan application.
Okay.
So, yeah, he's right. It's a whole different system. Takes a little bit longer. But that being said, should be a day or two. I don't think it's much longer than that. Dion, what's the best way to get out of a hard Monet loan?
Pay it off.
I like the way he worded that.
Monet.
Only two ways, man. Cash money or a new loan.
Pay it off.
That's
it. It's the only way out.
Traditional financing may work for you. I don't know where your percentage is, and I don't know if they're trying to break your legs to get out of that hard money yet, but traditional financing is usually the way that most people go at it.
Hard money gets expensive.
Yeah.
I mean, it's because you're in a spot where you can't get traditional financing, and everybody wants 3.5% down and a 3% interest rate. I want that, but it's not real. Yeah. It's not in the real world. So if you're trying to buy an investment property, and they're probably going to need 20% down, probably 20% down, and if you're going hard money, the rates are not pretty, man. What do you see your hard money rates at these days?
9+.
9. I seen a 12 the other day.
Yeah.
12, and it's the scenario dependent. So some of them are better, some of them are worse.
Jen, are USDA loans have higher interest rates? Do USDA loans have higher interest rates? And the answer is no, they don't. So typically speaking, government insured loans, that's FHA, USDA, VA, they typically have better pricing. Typically, I won't say always, but typically have better pricing. And USDA is going to fall right into that. Now, rates are up for everyone. So you're not going to get a 4 or a 5 or a 3 on USDA. Once rates go up, all of them go up. Once rates come down, all of them come down. So you might get slightly better on a USDA if you're approved. Hey, he hate him 3. I make $105K, but I bonus around $30,000 a year for the past 2 years. Can I use the bonus as additional income?
Yes.
Yeah.
If it's 2 years and documented, that's the guideline.
So
2
badass
years
bonuses.
And documented. Yeah, $30,000. That's a good bonus.
What do you do? He hate him 3. We're trying to get people to make more money too.
Yep.
What do you do? Nathalie Bernal. Does 800 credit score and 850 make a difference?
Well, at that level, no, not really, because first off, 850 is like impossible to get on a FICO range.
I think you're just showing off.
I think so. You might be flexing, Natalie. Yeah, that's a bad. So 850 is like almost impossible. The highest I've ever seen, and I pull credit every day, is 846. That's the highest I've ever actually physically seen mid FICO, not one, but mid FICO 846, the highest I've ever seen. If you're at 8 and 850, the minute you get above 8, you're in gold. You're gold. It's not going to get much better for you between 8 and 850. So you're gold.
What's up, Kitty Harris?
What's up, Kitty Harris?
Kitty Harris wants to know, do y'all work
Jacob
in Philadelphia?
Jeffries, Ed Good Dude, Fox
Yes.
Busa, Drew Dromany. Oh my God, there's a lot of people joining.
Killy
Great
Harris,
to see you
we
guys.
do work in Philadelphia.
392 Gilbert joined. Dude, we got a lot of people joining. We appreciate you guys wherever you're at. Tell us where you're at. Ask us your questions. 2 licensed loan officers that close loans every month, trying to get you a house in 2024. Appreciate the hearts, whoever's hearting us up. Let the algorithm know we're trying to help you get a house. You don't have to be mystery. It doesn't have to go, hey, I wonder if. Come here, we'll help you. We'll give it to you. Even if you don't use us as the loan officer, we'll check your loan officer.
Okay, so Kitty Harris, yes, we do home loans, and we do them in Philadelphia. And for those of you that are interested in getting a home loan, all you have to do is go to the link in our bio, click stand.store, that's the link, and apply now. Apply now will get you a refinance, we'll get you a HELOC, we'll get you a first-time home buyer program. All the programs that we're talking about, just click apply now, and it'll go right into our database, and we'll give you a follow-up call.
So Yo Coca 97, best advice for renting out a single-family home. Do you own it? If you own it, here's the big advice. Vet your clients. Vet your renter. Vet them really good. Because a good renter makes the rental experience amazing. A bad renter can change your life. Not a little bit, a lot.
What's up, Drip City?
So, if you can, when I rent a property, I have property managers now. I used to do it myself, but I've run into problems where I can't get a tenant out. I've run into bed bug problems. I've run into damage doesn't get covered by the deposit problems. I've run into a lot of problems. And professional rental company, people who rent it, they usually charge you 10, 15, sometimes 20%, but they handle all the problems.
Yes, they do own the home.
So yeah, if you're renting it out for the first time, man, people sound amazing when they're trying to rent it. They sound amazing.
Yeah, be careful with those heartstrings too, because they'll
Yeah.
pull on those bad
And
boys.
that's the thing. If you have a rental company, their heartstrings don't even
Zero
turn
heart.
above. They got zero heart,
All
man.
business.
You violated the contract. Get out there. Here comes the sheriff. Here's your 3-day everything. But if you're actually the guy who's running it, you're like, yeah, but I've been sick and I'm a veteran and I have this problem. And I'm like, well, okay, I guess no. If you're trying to rent it out, it's a business. Treat it like a business.
Hell yeah. So, 392 Gilberto, is it true that manufactured home interest rates start at 9%? If so, that brought down by Redfin. If so, can that brought down by Redfin? Okay. So, Gilberto, here's the truth of it. If you're talking about mobile home financing, maybe, because I'm not familiar with that. That's not real estate financing. That's a different type of personal financing.
In California, it was governed by the Department of Motor Vehicles for many, many years. It recently switched, but because it's wheels. It's a wheel house. It's not real estate.
So, when it comes to regular real estate, you'll fall into regular real estate terms, which means your rate's going to fall. What Lee talks about every single day, with it fluctuating from 5.75 to 6.25 right now, you'll fall into that type of financing. So here's what it is. What he said is correct. If it's DMV, then it's a different process. If it's real estate, that means that it's attached to the earth via a permanent foundation, meaning it's anchored to the ground. Okay, you can't just drag it around the USA. It's built after June 76, and it's has a recorded 433, which means that an engineer went under there, looked at everything, and said, yes, this is done right, and it's recorded. So no, not 9%. That I've seen, so you can get much better. And I don't know what you mean by brought down by Redfin, but let us know.
Stefani. I like that. Stefani. I like Stefani. So, Cervantes, should I pay off our cars before purchasing a home? Depends. If you make a lot of money, I've got a client who makes like $280,000 a year. He's got a $1,000 car payment. She's like, should I pay it off before? And I was like, you make too much money. No, there's no need. You can if you want to, but there's no need to. Now, it does eat away at your buying power. So if you have a $1,000 a month payment, that's going to subtract about $2,000 of your income. So if you made $6,000 and I subtract $2,000, you only have $4,000 for buying power. So is it a good idea to pay it off? Depends on your file. Some people, yes. Some people, no. Depends on what that mortgage payment is and what price you're buying.
So here's what I would do if I was you guys that are interested in buying a house right now. I'm going to smile so you can take a screenshot. Now that you've taken a screenshot, our phone number is right here. What you're going to do is text us that you're interested in buying a house. That's all. Just say, interested in buying a house, interested in buying a house, and then Lee and I will reach back to you. That's all. Now, Riley Carroll, I close on Monday.
Congratulations, Riley. You're going to be a homeowner.
Just got my cashier's check today, I'm assuming for the cash to close. Will I get the keys Monday, or do I have to wait till check clears? Okay.
So, yeah, you want me to do it?
Yeah, go ahead.
Okay. So there's a process. When you talk to the bank isn't the end of the process. The bank is the money. So when you enter escrow is a non-biased third party that will execute what all parties agreed to. So the seller agreed to sell, the buyer agreed to buy, the bank agreed to lend. So as soon as you meet all of the conditions for the bank will do what's called fund the deal. They actually fund, and they don't send the money to you, they send it to escrow. Now, escrow receives the money. Once they receive the money, they have to go, okay, let's make sure everybody is still doing what they need to do. And they have to do with something called balance. After they balance, you will get a thumbs up that you balance and you're clear to close. Funded, no, I said clear to close, then funded. Then the escrow will get everything, make everything, and then they send the check out to everybody after they record. When they record, that's the legal instrument that designates you are now the new owner. Until they record, you are not the owner. We've actually had loans unfund. Like literally, the bank sent all the money and something wasn't right at the last step.
They pulled it back.
And they said, you know what? This doesn't line up anymore. They pulled the money back. And we got notified, your loan has been unfunded. We were brand new loan officers when this happened. And I'm like, what the heck does that mean? And we're like, and we dug in, we found out, yeah, you could do that? I didn't know you could do that. I'd like to unfund my college education that I never finished. I want it all back. So as soon as it records, now the realtor has the power to give you the keys. I hope that helped. I hope that helped you. Yeah.
So what that means is maybe Monday if it records, maybe Tuesday. So the recording is going to be the trigger, as what Lee said. So Soknin, my husband will be working in Georgia, but we want to purchase a home in North Carolina as primary residence.
No problem.
Lee says, let's do it.
No problem. No problem. As long as I have reason for you to be in North Carolina. I did one recently where a nurse in San Bernardino County was buying a house in Vegas. She wanted to buy her primary house in Las Vegas. And I said, why? And she said, well, because my mom's there, my dad's there, my dog's there. I go there every weekend. I just happen to make a lot of money in San Bernardino, which is about 3 hours from Vegas. And I said, okay, can you prove that? She's like, I'm up there every weekend. I buy groceries and shop and pay bills. I said, okay, cool. We met a LOE, letter of explanation, to the underwriter. Proved to her that she was raised in Vegas. She got a big paying job as a nurse in San Bernardino. So, but she comes here to work and then she goes back. So if you can show purpose of why your primary is there, then yes.
Football book. I'm missing some data here, man. You said that you have an 800 credit score, but and then it says we both make 100K.
So I like that statement.
Yeah, both great
you
statements.
both make 100K? Yeah.
So what's the rest of the question?
Fill in the blanks. We're here for you guys. We're trying to help you get a house. 2 licensed loan officers answering your questions. We are not committing to lend to you, nor are we quoting rates to you right now. The only way I can quote your rate is to pull your credit, calculate your income, check your assets, build your file, then I give you your quote. Yeah. But in the meantime, New American Funding is saying 5.75? 5.75?
We'll get to a lot of questions, so we're going to get to all your questions.
We're going to get to them. We're going to teach you.
Thank you for the hearts.
Yeah, thank you for hearting it up. Let the algorithm know. We're trying to get you a house. We got people on Instagram, on Facebook, on TikTok.
What are rates, man? They
YouTube.
need to know what rates are.
All right, cool. 15-year fixed right now, 5.75%. What? 5.75%. 30-year fixed, 6.25. That's conventional conforming. Wait, what? That's Fannie Mae, Freddie Mac, conventional conforming. FHA, 5.875. What? That doesn't sound right. 5.875. VA, 5.875. What? That doesn't sound right still. Don't believe me? Go to the link at the top of this profile. Go to Cool Stuff, and then you'll see today's rates. You'll see what New American Funding is putting out to the world. That is not my quote to you. That is New American Funding's quote to the world. My NMLS is 944254. His is
1066958.
Cool. We got to put our NMLS numbers for rule purposes. I don't know. Whatever.
Pumpkin. I like that because it's not pumpkin. It's pumpkin. A car in my name for my mom. I can show proof she pays it every month. Will it affect debt to income?
Pumpkin. I like that. Pumpkin. I got good news for you. As long as she didn't pay you and it went through your bank account and then you paid it, and she paid it straight out of her bank account for the last 12 months uninterrupted, I can ignore it.
Boom. There you go, Pumpkin. You heard it first.
Pumpkin, we're here for you.
Relentless One. Have multiple $20,000 to $30,000 credit cards. Damn. Do you have to max it out and pay it off every month to get an 800?
Oh, Relentless. That's bad news, man. That's bad news. You don't ever want to do that. Never. That's if you take a credit card to 100% usage. Let's say it's 30 grand and you take it to 100%. That's irresponsible use of debt. That's how they look at it. The responsible use of debt is 30% or lower. Now, the other thing is bad is you have 30,000 but you never use it. That's not good either because we don't know how you handle debt. But if you use debt responsibly, you get your score up slowly. The most important thing is time and service. how long have you been paying your bills on time? If you've been doing it on time for a very long time, it will reflect into your credit score. Appreciate you guys on Instagram. Thank you very much. I see all of you guys. On TikTok, thank you. Facebook and YouTube.
All right. Denied 2018. Would you guys recommend withdrawing from a 401k to cover a down payment?
Well, it depends on your file, Denied, but I wouldn't be against it. I would not be against it. Here's what's happening. When you invest into a 401k, you are investing into stocks, bonds, mutual funds, some type of investment for your retirement. That's what you're doing. If you treat your home as an investment, you've changed stocks, bonds, mutual funds, whatever, into real estate. You're investing. Are you spending it? You're not really spending it because at some point you sell that house and you get greater, or you sell the stocks and you get greater. So it is a matter of how you look at the dynamic. If it's necessary for you to do it, yes. Now there's something you need to consider. There are withdrawal limits. If you take out too much, you can get penalized and the IRS can come after you, and there's a bunch of stuff that you have to look at. When we do it, we actually file for what's called TOW, Terms of Withdrawal, from the 401k company, so we can find exactly what your 401k allows and then make it bend to best meet your needs.
Nice. So I had a child as a retirement plan. How do I use that for down payment?
I don't know, man.
How do I take money out of it?
Dude, these are technical
Yo,
questions.
Coco 97. Do you need any licenses when renting out more than one single family home?
It's going to depend on your area. Airbnb is starting to require, and it's the cities, municipalities. I don't think it's happened in the states yet, but they are requiring a business license because it's short-term rentals. It's a little bit gray area right now. Used to be pretty simple. I rent for a year, no big deal. But because Airbnb became such a big thing, some counties and municipalities across the country are requiring business licenses, and they actually must be displayed in the Airbnb. Weird, but it's there.
All right. J.110. Can you get a rate under 6% right now in Cali?
Yeah, we just told you FHA is 5.875. 5.875 according to New American Funding. Now, could you get it? Sure. The next thing, J. Dot, is going to be, well, is it free? Is it for everyone? No, it's not. It's not. If you look at New American Funding's website, there's going to be a little asterisk, and it's going to say, you must have an 800 FICO score. You must have a 24 DTI. You must have 40% down, and you must be buying down the rate. All those, yes, 5.875 today.
Sockman, yes, you're welcome. Yes, we do North Carolina. We do all states in the nation.
All states.
So if you guys want to get a home loan, reach out to us, or you can just go to the link in our bio. Click the link, click get pre-qualified now or get your home now. I forget what it says. What does it say? Apply now.
Apply now, yeah.
And start the process. You don't even have to talk to us, and we'll give you a call after we get out of this live. This name's funny. Fat, not pregnant. How soon can I start looking for a home?
You're going to get us canceled, man. You're going to get just
That's the name!
I know, but you're still going to get us canceled.
Actually, it's Fat N0T pregnant.
Okay, I love it.
How soon can I start looking for a home? Question mark. My BK was discharged 1 year ago.
Discharged 1 year ago. You got 1 more year to go, unless.
Ooh, I like this one.
Unless fat, not pregnant. Unless you had extenuating circumstances. What are extenuating circumstances? Well, COVID was one. What happened? Well, we had this gigantic worldwide pandemic that made everybody not be able to get on the freeways and not go to the roads. Is that extenuating? Sure it is. Well, we got a hurricane that hit Florida. Is that extenuating? Sure it is. I wasn't feeling it, so I didn't go to the job, so I lost my job. No, that's an extent. If there's extenuating circumstances that caused your issue, we can do it at 1 year.
Nice, I like that. 1 year. Relentless. How often can you do a 1031 exchange yearly?
That's a tax question, and I don't feel all the way comfortable doing tax questions, but I can tell you that when I do 1031s, they're not something that you can very easily do. They are a long process. You have to sell it, designate it. You got 90 days to identify, 180 days to close. Don't quote me on those because I'm not a tax professional. I just do the loan for them. I have seen them done multiple times. How many times can you do it in a year? Do not know.
Oh, wow, okay. Great information, said Jay Morrell.
We're here for you, Jay.
J.110. Could it be possible to get a rate under 6 minutes? We already answered that one.
Without buying points.
Oh, without buying points.
No, Jay. No. No, 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 no. Let me say that again. No, 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 no. Why? Well, because the prime is set right now 5.25 and 5.5. The prevailing rate in the market is probably 6.875 to maybe 6.5, 6.875, somewhere in that rate, which means all the banks come together and that's about what they're charging. Now you have your low liars like Quicken. Quicken can sometimes do a very low loan, but they can't go much higher than the 10-year yield. So the market forces are driving this without a buy down. The reason is they don't make no money on it. Why would they do it if they don't make any money? Just to make you happy? No. That's not how it works.
That's not their goal?
Not their goal.
Government's job is to make us happy.
What?
That's
the
stupid.
banks, man. The banks, not the government.
Oh, okay. Well, the banks make me happy.
Yeah.
Paola C. is renting out a house part of an income as well.
You take that.
As long as you claim it. So many people think that making money and not paying taxes on it is a benefit until you reach one of these phases. So if you have a renter renting a house, renting a room, renting a garage, whatever it may be, Airbnb, if you're claiming it on your taxes and you've claimed it for the last 2 years, then yes, we can give it income, as long as it's positive income.
And you need landlord history. So you can't just start today and then you get to rent in excess. You need landlord history. What's landlord history?
Shows that you've been historically renting.
Okay.
And that's what the 2 years comes in. So if you can show 2 years of filed taxes that you've been claiming this income, then yes, we can use it. Here's the other problem. Balloons!
Balloons! Thank you very much, balloons! Thank you, thank you, thank you!
Here's the other challenge you're going to run into. You're going to file your taxes. You're going to say, I made $15,000 this year in rentals. And then your tax person is going to say, cool, here's the bill that you have to pay. Then you're going to say, wait a minute, I don't want to pay that bill. And he's going to say, then we'll use deductions. If you deduct it and you're upside down on your rental, you get to use that income. You actually have to hit it negatively against you. So your DTI gets tighter. So there's a right and wrong way to do this.
Relentless. Can you buy a home using an LLC, then transfer it to another LLC during recording? I'll give you the technical answer, but I'm going to give you an answer you don't like. First off, we don't deal with the LLCs. We deal with people. We help people get houses. That's Fannie Mae, Freddie Mac, VA, FHA, USDA, a few others. But we help people get houses. If you go to a corporation, you need different loan officers. They're different than your standard NMLS loan officers. They're corporate financing. And on most notes, there's something called a due on sale clause, which means the minute I sell this property, well, you owe me all the money back. So if you bought it in one LLC and that LLC qualified for it, and then right at the last minute you go, psych, I'm actually giving it over here, you triggered the due on sale clause most of the time, not every time, but most of the time, and then that bank's going to want their money back. I hope I answered your question.
Yeah, thank you all for the hearts and the shares.
We appreciate you.
Those
Heart us up.
Thank you very much. Thank you, Renee Nicole. Thank you, Riley Carroll. You're welcome. Relentless One. You already answered that one?
Yeah.
Suknin, you're welcome. MC, Credit Repair Company info, please.
Okay, so MC, we got a few of them that we use. We got a few that we personally recommend when we do it, and we've got one that we've actually had good success with. There's a link at the top of our bio. You can actually go to the bio, go to the link, and it'll say, get your credit repaired, and I think it's called
Fix Your Credit.
Fix Your Credit, credit repair, Fix Your Credit. We've actually gotten some good feedback from these people. So it's good stuff. There's a lot of credit repair companies out there. You can actually do it yourself, but it's really difficult. You can go on TikTok. There's unbelievable amounts of people trying to get you to hire them to fix their credit. But we send a lot of people, so we have a few that we trust, a handful, and if we get bad reviews on one of them from 2 or 3 customers, gone. I don't care. There's too many others out there. Gone. Just gone.
How are single parents purchasing homes with one income? There is no way I can do it, said user 8753.
It's hard. It's hard.
Ask me how I know.
It's hard. It's very hard. Yeah.
That being said, we have something called the Chris and Lee 123. Okay, so being in this business, we've identified that there's challenges. There's income challenges. There's credit challenges, which Lee just shared with you how we can solve that by going to the link above. And there's down payment challenges. Okay, so for the income challenges, Lee, we had a client a little while back that said, hey, I'm doing this side hustle, I'm making a lot of money, so we decided to copy them, and these are the platforms that you can follow if you're interested in making a little more cash.
We have made money off of it. Yeah, we have made money off of this. Are we licensed in North Carolina? Yes, we are. licensed in all 50 states.
All 50?
All 50.
How about VA with bad credit 580? Can you do that?
So, user 4927, there's this thing going on TikTok. I don't know why, but there's some loan officers saying, hey, you need a 620 for a VA. Hey, you need a 580 for a VA. If you actually understand the rules, VA does not technically have a FICO score requirement. Does not matter. VA actually has something called a residual, and the VA loan is residual driven, not FICO driven. So, by the book, doesn't matter what your FICO score is. Doesn't matter. Now, that being said, they do check your credit worthiness. So they will look at your FICO score and they'll go, hey, you didn't pay the last 6 bills for the last 6 months. I don't know if we can trust you. So that happens. But there is no technical FICO requirement for VA. I don't know why it's a big deal. Anybody can put it in Google. I think loan officers that are brand new just listen to their manager and their bank says, no, 620 or better, and that's it. And I'm like, just go to va.gov and the guideline is right there and it says no credit requirement.
Yep, and LOs out there, this is a little bit of a, I'm going to let you guys know what you can do. Your manager doesn't know everything. They do not. You got to go deeper. You got to go behind the door. You got to see what's behind the curtain to figure out what's really happening so you can help your clients.
And learn how to ask the questions because your manager, we've had some great managers in our past. Some really great ones.
And we still do.
We still do. Yeah, we still do. We have great managers. Great. But nobody knows everything. And just because the manager's told you, next thing I say is, hey, send me source so I can look at this. And I'll give you one that where we went up against something. They said, hey, listen, this is an uncle, but it's an uncle from a step somebody. And I was like, but it's still an uncle. And they're like, no, because there's no bloodline. I'm like, no, that's a family unit, and that's an uncle. So the underwriter saw it as, no, this is not an uncle. And even the manager saw it as not an uncle. So we took it to a higher position, and they said, now, wait a minute. Is this family still intact in this situation? I said, yep. Then the CPM, which is credit policy manager, the person above the underwriter, said, I agree with you. And then the manager and the underwriter said, I'm glad you won. We want that to work. So they're on your side, but you have to be, it's a thinking game. This is a very thinking game.
Very thinking game. This is that single parent. My credit is good, so I don't know. The prices are too high and the interest rates are what's making it go up.
Oh, you think they're going up now? User 8753, I got bad news. They're going to go up a lot more in the next year. A lot more.
So here's the solution for you, user 8753, single parent, cosigner. So if you don't, waiting is not going to help you. Waiting is not going to help you. What is going to help you is adding more income to the file. So getting yourself a cosigner. It doesn't have to be a family member. It can be a friend. It could be a family member. It could be anyone. It could be your enemy if you could live together.
Child support or alimony.
Child support and alimony actually help. Okay, so that's increasing your income as long as we can prove that you're going to be receiving it for 3 years or more. And paying down debt. So increasing income or paying down debts are the only way that's really going to help you. But here's some good news, okay? You get yourself a cosigner. Maybe they're not going to live with you. Maybe it's just someone that's willing on helping you, okay? Get into the house. A year from now, interest rates should be down. Values should have skyrocketed. And you might be in a position to refinance and take that person off entirely in about a year or two.
Maybe.
So there's a strategy for you. Give us a call and see if we can help. Time for commercial.
You need a badass loan, call a badass loan officer. You can reach a badass loan officer by texting the numbers on the screen right now. Your badass loan officers, Chris and Lee, work at New American Funding. Call us after the live, not during the live, because we won't answer. This will disappear in 5, 4, 3, 2, 1. Bye.
Boom.
Ryan, what's up, Ryan?
Rates in the eights.
Yeah,
Ryan's a rapper.
No. Ryan.
It's a question.
Questions. Well, about 3 weeks ago, CPI came in, not what we expected. Rates bounced because of uncertainty. Then PCE came in. And it came in right as expected. So rates have been slowly hovering back down to that. Hey, we think we know what's going to happen over the next 6 months. And we actually saw rate decreases over the last few days. Now, when I say rate decreases, people think, well, we went from 8 to 6. No. So in order to get, let's just say a 6.25 at par, let's say you can get 6.25 at par on an FHA. Well, instead of getting it at par, you get $200 back. So that's how the rate changes just a little bit. So they've been slowly coming down just a little bit. They won't really dramatically move until the Fed moves.
Boom. Joseph Ambrosio. How many years of financial history should I have before trying to buy a home? So
I put somebody in with 1 year.
there you go. Yeah, your history, your scores are what really matter. Your scores.
And
so,
amount of trade lines at that level. Yeah.
well, if your scores are shitty, yeah.
Yeah.
I mean, if you're closer to the 580,
Yeah.
you want some trade lines. If your
Yeah.
scores are better, then you should be golden.
Yeah.
So, Joseph, here's what I'm going to recommend, and I recommend it to everyone. There is not one person that has crossed my path that I have not said this to. Just get pre-qualified. Doesn't cost you anything, doesn't impact you negatively, but it will tell you exactly where you stand, and if there's work to be done, dealing with our team, we'll give you the right advice to walk down that path so you can buy a home tomorrow. Thank you, everyone, for the live shares.
Appreciate you
Thank
sharing
for
the
the
live.
hearts.
Thank you very much.
Thank you for the love. Texas interest rates, man. What's going on in Texas?
No, it's
Is it
Texas,
different?
She says Texas Instruments.
Oh, she wants a calculator.
She wants a calculator.
Okay.
8.5.
How do you know it's a she?
Because it's a picture of a girl.
Oh, you're a brilliant
I'm
investigator.
a genius.
As well as being
I
an
could have been a
okay loan
CSI.
officer.
I could have been a CSI guy. Yeah, I could have been a CSI guy. Interest rates are the same across the board. The only difference in buying power is going to be your property tax base and your homeowner's insurance. They get some expensive in some areas, gets cheaper in others. Tax base in Arkansas is very low. Tax base in California is kind of low. Tax base in Texas, very high. Very high. So we'd have to pull your file, put it together. But the rates that we're talking about, across the board, doesn't matter.
Across the board, you can get
Yeah,
yourself
and a
6.25.
15 year is 15 year right now, conventional 5.75, 15 year 5.75, 30 year 6.25, or FHA 5.875, and VA 5.875.
So that says Daisy Fernandez, but you know what came into my mind?
What?
Daisy Fuentes.
Oh, there we go. We like Daisy Fuentes.
Down payment assistance requirements. Ask Daisy Fernandez.
Yugo.
Here we go. Yugo's an old car. They don't make those
It is
anymore.
Yugo. Yeah, that's pretty cool.
So
You could buy
Here's-
those with pocket change, I think.
still,
Back then.
I might want to get one right now.
All right.
Okay, so down payment assistance requirements. The first number one is 2-year work history. You have to prove that you had a job for 2 years. But guess what? That's all loans. FHA, VA, USDA, Fannie, Freddie, all of them. You need 2-year work history. So that also applies to down payment assistance. Number two, you need a 600 or better credit score. Now, what does that mean? Well, at 600, we'll get you down payment. At 660, it'll get you down payment and closing costs. And then the in between you can assume. So it scales up. You get more benefit with the higher credit score. So that being said, that's all you really need. Once it comes into us, we'll figure out how much you can afford and if we can get you approved. But that's it.
Sandy. Can I get a loan with collections on my credit from identity theft?
Can I get
Ooh,
a?
I don't get it.
It's the song. Can I get a? Bounce from me.
All right, got it. Okay, so Sandy, if you have identity theft, it's a very strange situation. And we can get you a loan, but it's a lot of work, and we don't mind doing it. It's very sad, but you're on fraud protection, fraud alert. You have all these things going on, and we're going to have to validate every trade line and then custom build your file. The answer is yes, you can. Not easy, but we can do it, and we will do it.
All right, I love it. Denise Lopez. What if I have bad credit and your husband has I-10? What if you have bad credit and your husband has an I-10? Can you purchase a home?
You better have a lot of money, like a lot of money, because I-10 loans are very unique because you're not dealing with a U.S. citizen. They could be leaving at any time. So they require 20% down. There are some 15%, but most of them are 20% down. If you have bad credit, well, then that's a negative hit to start with. So highly recommend we work on that credit, because credit is your history of paying back your debts. Somebody trusted you with money and you signed an agreement and you didn't adhere to the agreement. That's what credit is. So you're now going to a bank and saying, hey, I know what I did to them, but can you get me $500,000? And the bank goes, we don't really like what you did to them, so probably not.
But do you even know that?
As your credit score goes up, and by the way, it doesn't disappear. We pull credit. I can tell. Somebody comes to me like, hey, have you been looking for a home? No, not at all. All right, cool. How come Wells Fargo pulled your credit 2 weeks ago, Bank of America 4 weeks ago, and Freedom 6 weeks ago? Well, I wasn't really looking for a house. I was looking for, we know everything that you do. If you pay a credit card late 7 years ago, it shows up in a little column, and we're like, hey, how come your MasterCard was paid 30 days late in 2017? And you're like, I don't think it was late. I'm saying, no, it's showing right here, 30 day late. And we can see it all the way back to 10 years in some cases.
So it's definitely somebody else's
Yep.
fault.
Mm-hmm.
You can tell. definitely tell. Thank you, Mohammed, Soknin, Roland, for the love. I appreciate it. Are you able to buy a house with only $33,000 a year in income?
It depends on where you live. If you live in Arkansas, there's some places where you might be able to, but it really is debt to income ratio. So here's what you got to do. You take your income at $30,000 and then you, real simple math, divide it in half. So now you have $15,000. $15,000 has to cover PITI and all revolving debt. $15,000 is roughly $1,200 a month, somewhere in that range. So with $1,200 a month, I have to cover your mortgage payment, all of your revolving debt, then maybe you have a chance. So in that situation, depending on where you live, you might be able to, we need to work on getting that income up or someone helping you buy that house.
Everyone hang in there. We're going to get to all your questions. Reina Garza, what kind of loan do I need to build my own home on my own lot?
Okay, Reina, you need a construction loan. Next question. Can I do it with FHA or VA? The answer, yes. Is it easy? No. It's very difficult. It's called a one-time construction loan. Does exist. It does. I've attempted many. Never finished one to the end because they're very difficult. I've done a lot of 203K loans where you buy a house and it needs a little bit of improvement, so you put a loan on top of the loan. But from scratch, so technically there is one, but it's very difficult.
Yeah, there you go. So the rates aren't going to go down? Asked Kristen Noel.
I don't know who told you that. According to the Federal Reserve, chairman of the Federal Reserve, who is Jerome Powell, that's this guy right here, he anticipates three Fed reduction rate cuts in the calendar year 2024. And if you actually watch the economy, we believe third quarter and fourth quarter of 24, rates are going to go down significantly. And a lot of experts believe we are going to reopen quantitative easing around fourth quarter, beginning first quarter of 25, which means money's going to flow free again, rates are going to go down, but prices are going to go up a lot when that happens. I believe. I could be wrong, but I'm usually not.
I love quantitative easing. It's so bad for you.
It's so bad.
It's like sugar.
No, it's like cocaine. Sugar, you get over in a little bit.
Sugar
attacks
cocaine, more areas of the brain than cocaine.
Cocaine really gets you psyched up for a while.
Dude, I don't do as much coke as you.
All right, maybe.
Stephanie. Oh no, Nardos. Nardos is back in the house.
What's up, Nardos?
I'm working 36 hours a week. Can I get pre-approved?
Yes.
Can Nardos get pre-approved?
Yes.
Why hasn't Nardos called us? That's the question.
Nardos, you gotta call us like right now, like 911. Beep, 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 911.
Stephanie Cervantes, in California, I know there's first-time homebuyer loan that would be affected if we can get a cosigner. Effective, probably, if we can get a cosigner.
There's no first-time. Let me think about that for a second.
There is.
Which is the NAF? Platinum?
NAF one. That's
the
better.
NAF one. Okay, so the NAF one and the Platinum one. Most of the down payment assistance programs prohibit a non-occupant co-borrower or co-signer. So co-signer means he doesn't live with you. Non-occupant co-borrower is the way we say it. Occupant co-borrower means we're both on the loan, and we both live here. So occupant co-borrower, all of them will let you. Non-occupant co-borrower eliminates most of them, with the exception, off the top of my head, of Platinum and the NAF proprietary down payment assistance program. So there are
came
a
up
few
with
of
that
them.
in the spot,
Dude,
we were like, huh? What?
Lightning.
Two right now.
Lightning. We appreciate you on Facebook, Instagram, TikTok, and YouTube. We're here for you guys.
Vanessa, if I don't have good credit, but I have a house to sell, owned, will it be easy to buy?
Nope.
So what's bad credit?
Yeah, and how much profit are you making on that house? So if you're making what the hell? We just got slapped again.
Said okay.
I got slapped again. We just got slapped on the social media platform. I don't know why. Anyway, so if you have a house and you're making $800,000 in profit and you're trying to buy a $600,000 house, well, it's easy because you have $800,000. You can just put a check for as much as you want to or as much as they require. If you have bad credit, the great fixer is cash. If you put a lot of cash down, all of a sudden the banks go, I don't really care about your credit. You're putting $500,000 down on a $600,000 house. I'll do that all day long.
Why? I want to know what not good credit is.
No risk, yeah.
So not good credit to a lot of people is like mid 600s, even low 700s. So what's yours, Vanessa? JD Wireless. That sounds like a business.
It does.
Can I buy a multi-unit with FHA?
Oh, yes. All day, JD.
Are you sure?
Dude, you can buy
Wait, double
2
check
units.
That.
2 units.
Go back in your brain and double
Okay, hold
check.
on. Let me check. Yep, double check.
Wow.
You can buy 2 units. Heck, you could buy 3 units. You could even buy 4 units.
You know what JD Wireless said?
What?
He's looking to get a multi, but they're close to $1 million.
You know what? Oh, dude, you know what? And 4 units in LA County, $2.2 million limit.
Damn.
2.2 million.
Boy, you crazy.
Really crazy.
Boy, you crazy.
You crazy.
So here's the question, JD Wireless.
We're trying to get to all your questions before they give us one of those again. I have to be more careful with the words right now.
He said, I live in California, super expensive. I have about $80,000, but I don't know where to start. Dude, we got it for you. But Lee just
start there. You call us. End the game.
That's
cool.
fire.
Well, we skipped somebody's question, man. We got to get
a lot of them.
We're trying to get.
Brandon wants to know how to get pre-qualified.
Dude, you just call us right now, or you can go to the link at the top of our profile.
Oh my
and there's
gosh.
an application right there. Cool.
Andy the Goat's in the house.
Okay, cool. Andy the Goat.
And he says, oh my God, here we go.
Here we go. Here we go. Here we go.
It
Andy the
brightens my
Goat.
day. You skipped my question. Can everybody buy down the interest rate?
Okay, so that's a very weird question. So, like, if I have my interest rate and the bum on the street wants to help me buy it down, I have to justify why I'm getting the money from the bum on the street.
And
so
can he source
probably
those
not.
funds?
Yeah, can he source those funds? Yeah. So, can you as a buyer buy down your rate? Yes, everybody can. When every loan officer, this is where they mess up. Every loan officer pulls a grid. And right now, if I pulled the grid, it would be 5.25 all the way up to 8.25. So there would be that much spread in there. Then there's the par rate. Par means no cost, no benefit. So that's your rate. But if you want money back, I move the rate up and I'll give you $10,000. If you want a lower monthly payment, I move the rate down and you pay $10,000. Pretty simple, but some loan officers just go, well, your rate is 6.75, it's what it is. And that's not true.
Andy the Goat's trolling. He's
Okay,
trolling.
cool.
So I answered a question about a 2-year work history, and he says, like, you have to be at the same job for 2 years?
Oh, Andy the Goat.
Man.
Setting him up for us to slam it.
Yeah, the answer is no. You don't need to be at the same job for 2 years. You do not. As a matter of fact, you don't even have to be in the same industry doing the same job some of the times. So if you do have a gap, or if you've changed jobs, thank you, Andy the Goat, you can still move forward to buy a house.
Mm-hmm.
Rachel McCann, how about having a history of bankruptcy? A history of it? How long do you have to wait?
Simple. 2 years. Simple rule, 2 years FHA, 4 years Fannie Mae, Freddie Mac, VA 2 years. There is an exception for extenuating circumstances where it's 1 year from discharge, and that's all for a 7. If you have a 13, I can literally finance you while you're making the payments on your Chapter 13. So it's going to depend on which one it is. Your credit score on a 7 should have spiked those. So this is all good news.
Andy the Goat said, why did my credit score go down when I paid off my car? I don't know, Andy. I didn't pull your credit.
Yep.
I didn't get a chance to look at it, but it happens. It's an installment loan. People think that when you have installment loans, that when you pay it off, that your credit should spike, and that's not the case. An installment loan, for those of you who don't know, is like a car loan, which you have one payment for this term, this many months. Once it goes to that last month, it's paid to 0. So it happens sometimes.
Brandon Fountain, is there a down payment closing cost assistance for FICO 590 in Texas? I got bad news and more bad news. The bad news is no. The more bad news is it's not just Texas, it's everywhere across the country. If you have a 590 FICO, there's a reason, and the down payment assistance programs don't want to help you. If you're, most of them start at about 640. We do have a few that go down to 600, but you got to be a golden borrower to get that at 600.
Sorry, Mr. Fountain.
Yep, sorry.
JD Wireless. Yeah, we answered that one. Maurice, bad credit. Can I get a loan? I have $80,000 cash. What's bad credit, Maurice?
Yep.
We need to know what that score is. Habib Mian. What are some good methods to pay off your mortgage fast?
Very good, Habib.
Fast. Faster.
Hold on.
Faster.
So I've had to deal with this probably 2 times in the last month. Somebody says, hey, Lee, I would like to get a 15-year mortgage so I can pay it off faster. And I said, okay, cool. So let me run a scenario by you. I'm going to price you out 15 years. And let's just say at the end of it, it's $4,000 payment. Okay? And now I'm going to price you out 30 years. All right, cool. The monthly payment is $3,000 a month. So you were willing to pay 4, but if I get you a 30-year, you're paying 3. They're like, yeah, but I'm paying off in 15 years. Okay, cool. So here's what you do. You finance the 30-year, and you take that $1,000 a month, and you have the discipline and you pay it exclusively towards principal. If you do that, you won't pay it off in 15 years. Probably pay it off in about 12. Wow, Lee, how come? Because the banks rig the system so that the majority of your payment goes to interest in the first 15 years of the payments. And if you apply an amount exclusively to principal, it eats away the principal so fast that you land up paying off faster than a 15-year and you game the bank.
Boom! Rico, 327. I need a mortgage for $500,000. I make $175,000 a year, pay $3K a month in child support in this. Is this doable? With that income? I think you're in the wheelhouse, man.
Yeah, that's a cakewalk.
It's a good income. So
Yeah.
Rico, Mr.
Yeah.
Rico.
So I'll give you some simple math. $3,000 a month times 12 months, 36,000. Cut that in half, 72. So I take 72 away from 175, and your quick monthly qualification range is over $100,000 a year. That's some weird loan officer math, but just looking at that, I can tell you that with $100,000 a year at today's interest rates, you would start $450, $500, somewhere in that range, and that's without me doing any magic.
Rico, give us a call, man. Heck yeah. Taco Dom. How is my overtime factored in? I make about $40,000 in overtime a year. Thank y'all. Damn, that's a lot of overtime.
That's a lot.
40 G's. How is it factored, man?
Real simple. We take 2 years. Add them all up. Divide by 24. As long as it's ascending or flat, I can use that rate. I can use that amount.
I like it.
If it's declining, I have to use a different formula. But it's pretty simple. 24 months of overtime, how much have you made in the last 24 months? Divide by 24. As long as it's flat or ascending, I can use whatever that number is. There's an occasional reason why I can use year-to-date overtime, but that's usually the rule.
I'm going to give you a recommendation, Taco Dom. Keep your 40 hours at 40 hours and keep pumping up that overtime until you get into a house and you'll get the most amount of income. User 8273, down payment assistance. Is it a benefit or a downfall?
You take it.
Good question, user 8272. So it depends on the person buying. So if you're capable of paying your own down payment, if you're capable of buying that way, I recommend doing it because all you're going to do is pay back a loan later. Okay? So doing a down payment assistance most of the time, all you're doing is borrowing the money now and paying it back later. And some of the programs, like the one that Lee talks about a lot, not only do they want you to pay back the money that you borrowed from them, they want you to pay back some of the equity gain. They want to share that equity with you, a percentage of it. So if you have the ability to pay the down payment and you don't have to use a program, I would recommend it. If you have to use a program, regardless of what program it is, if that's what it takes to get you into a home, then it's a good thing. So it's not good or bad. It's either appropriate for you or not appropriate for you. Christian Noel again. Okay, whew. I thought you guys said it. That I think you said home prices though.
Okay.
I don't know what that means, Christian Noel.
She's clapping at us though. Thank you very much.
We give her good news. Does the application hurt your credit?
Not really. I mean, it could drop it a point or two. If you tried with 5 different banks, it will hurt your credit. But if we're the only one pulling it, maybe not. If it does, it won't hurt it much.
I'm going to tell you what I tell everybody.
What?
If you have great credit and it's trending up, it's going to be up. If you have crap credit and it's trending down, it's going to be down. Has nothing to do with us. It depends on how you manage your credit. So if you have great credit and you want to do something and pull the trigger, you shouldn't question it. If you have crap credit and you want to do something and pull the trigger, I recommend pulling your credit now so we can at least send you on the path of credit repair if you need it. And if you need credit repair and you know it, go to the link up top, click on the link, and click Fix My Credit, and you can get the process started now. Angie Rosales, how would it work with a cosigner if they have credit over 800, husband has it in the 500s?
You take it.
So it's not working at all. It's going to be their house. Your husband's not going to be able to be on the loan because his credit's too low probably. So it's going to be the cosigner's house because they're going to be the only one on the loan. So everyone on the loan must meet the guidelines. 580 or better credit score, unless it's VA. 2-year work history. Okay? If you don't meet those criteria, you're not going on the loan. Kevin Lopez said hi.
What's up, Kevin Lopez?
Vanessa, how you doing? Selling a $120,000 home owned to buy a $280,000 home. I have 620 credit and my husband's 600 credit.
How much are you going to profit on that? Yeah, how much are you going to profit on that? Because 120,000, with the 600 FICO, I'd say you can go FHA. You're not going to get the best loan in the world, but you can make it happen. It depends on how much you're putting down on it, and that comes off of how much you're going to profit on it. So yes, it can be done. Hold the sign up, please. Rico!
Screenshot,
Rico,
screenshot,
screenshot.
And if you screenshot, the phone number's here too.
Andy the GOAT.
Yeah.
About 20% down. Should I still do a VA loan or no? Probably, yeah. I'll run all of them though.
If
you have 20%, yeah. If you have 20% down, the VA is such a good loan, man. It's such a good. The interest rates are better. If you put more money down, the interest rates even get lower. So the VA loan, because the VA is insuring 25% of the loan to the bank is really happy to give VA loans. So usually, yes.
Yeah, we're doing one right now. It's the buyer's choice. They want to keep their payment down as low as possible. Sorry,
that's why we got a thing. Got it. Good. Remember the age appropriate thing?
Oh, okay.
Yeah. Took an equity loan and mortgage off the rental properties off my rental property. What? All right, Rico, you took a loan. All right, good job, man. We appreciate you, man.
Can I still qualify for first-time home buyer 720 credit? Not if you already own a home, Rico. I think you just told us that you have a home.
Yep.
So the definition of a first-time home buyer is haven't owned a home in 3 years. Unless you're going with the California Dream for All, and that says you can't own a home in 7 years. And so can your mom cannot own a home, your dad not own a home, blah, 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 blah.
Yeah.
Lee goes on a rant about that.
Yeah, so 120 is the profit.
Woo!
Yeah, Vanessa, you're golden.
You're
that
golden,
can
Vanessa.
that can be done. That's no question about it. I'd like to compete for your loan. I'm willing to bet I can beat every loan officer out there.
Rico, but I bought homes in cash. You're still on title. They're going to pull title.
Yeah.
So if they pull title in the nation,
Yeah.
you're going to be on a home somewhere.
Yep.
Christian Noel wants you to repeat. Can you please repeat what you said about 30 years versus 15 years and paying extra to pay it off faster?
Okay, good. So here we go. We're getting close to the end though. So I had a client. They said, "Hey Lee, I'd like to pay this loan off in 15 years. I make good money. I think I'd rather pay the higher payment." And I said, "Okay, I will do that loan for you, but let me run a scenario for you, okay? Here's the scenario. I price out a 15-year loan and your payment is $4,000 a month, $4,000 a month. Then I'm going to price out that exact same loan on 30-year and your payment is $3,000 a month. So you are already willing to pay that extra $1,000. Here's what I'm going to suggest. You do a 30-year loan, and every month you add $1,000 extra to principal. $1,000 extra to principal every month. If you do that, you will pay your loan off in 12 to 13 years instead of 15 with that exact same $4,000 that you're willing to pay on a 15-year mortgage. Here's what the banks bank on, that you won't have the discipline to do it. If you do have the discipline to do it, you actually game the bank. Here's why. When you make your first mortgage payment, probably 20% goes to principal. So if you make a $4,000 payment, maybe 800. More likely 600, probably 400 goes to principal. But wait, I paid 4,000. Yeah, but there's taxes, insurance, and they make most of their interest in the first 15 years. And this is the rules. We don't get to change it. It's what it is. If you don't like it, don't borrow. But if you know that and you make principal payments exclusively towards principal, you start eating down that principal and you force the bank to recast the loan because the amortization table keeps moving because you keep paying principal off. And you really are doing good for yourself by doing it that way. So I said, Mr. Borrower, I'll do your 15-year loan. But if you really want to pay it off fast, the smart way, 30 years and add to principal. And you know what they did? Thank you, Lee. Thank you. We appreciate all your advice. They were engineers. They mapped it all out. They said, you're right. This works. We'll do 30 year.
There you go. All right, one more. Taco Dom said, is there a difference in PMI on conventional if I put 5% instead of 3%? Taco Dom. Want me to dig it?
Yeah.
All right. Yes, there is. At 3%, it drastically increases. And if the lower your credit, the more it goes up. The better your credit, you're in an okay spot. But yes, 3% has more mortgage insurance because it is a higher risk. And I'm Chris. That's Lee.
We've been Chris and Lee. We appreciate you.